Hello, everybody. I'm Peter Grant with Zaner Metals in Denver. This is This Week in Metals. I'm with Peter Thomas, as I usually am. How are you in Chicago, sir?
We're all good here. Beautiful weather continues. We're in the middle of, I guess, what is a drought, really. And it gives us bright, sunny days, and they're wonderful. But if you're a farmer, it's an awful thing.
Right.
There's always the yin and the yang to everything, right?
Absolutely. We're talking about some snow in the foothills next week.
You
I
guys
know
had a
it's beautiful
great ski
today.
season. I'm so jealous,
Yeah. Well, we
you
we hope
know?
for a good ski season where COVID
I
doesn't
agree.
shut things
I
down
agree.
again.
Nothing but good stuff for your guys. So
Yeah.
listen, let's break right into gold here. I wanted to go over the numbers I got from Russia. We're looking at 149 tons going into central bank was the number they released, which is 44% less than the year before. So I matched that up to the really the gigantic declines that have been occurring across the board, and the fact that China uh, had their 5-year incentive, which came out to 1,842 tons they're going to need over 5 years. And that number came from Standard Chartered Bank, which is probably the best gold bank in the world, in my opinion. So I'm going to say that's a reliable number.
Hmm.
So figure if you crunch that down with the losses that we've had from India consumption, which is varies between 1 and 2, we're still a little offset, which brings us to Pete, if you don't mind, what happened with India?
So we've been talking for some time that largely investment demand from the West has been supporting the gold market. As you mentioned, the central banks are not buying as much because
Right.
they're having to throw so much money into COVID response and so forth that building up the gold stockpiles have sort of taken the back seat. Um,
Yep.
but we have talked that when India returns to the market, that is going to be perhaps the catalyst to push gold in its next leg higher within this uptrend. And there was an indication of that last week. They announced August gold imports, and they nearly doubled from a year
Yeah.
ago.
Right.
60 tons in August. It was an 8-month high. So that, and I think that a lot of it is being attributed to jewelers restocking and so forth in anticipation of
Sure.
of a better wedding season and holiday
Well, the wedding
season.
season looks good because, as a lot of our people probably don't know, is that the monsoon is always related to the wedding season.
Right.
Good rains bring about good crops, bring about money to expend. Expendable money goes into gold. It's part of the gifting for that. So they had at one point they had 36 inches of rain in 38 hours, which is almost a meter of rain in under 2 days. So they had a great monsoon. So we're expecting a lot of output for wedding season.
Yeah, yeah. So that's a really encouraging number, and
Right.
it's not really being reflected in the gold price, at least not yet. Gold was down about
Well, we're above
1.6.
1900. That's a nice
Well, yeah.
number.
No, I still think that price activity has been corrective lately, but we
Okay.
did close down 1.6% last week. Um,
All
I
right.
thought I thought we made a run at 2000 again. We got as high as 1992 last week, and then it
Yeah.
sold
And then it
off.
fell. Yeah.
But we're also seeing a return of ETF buying. So we saw a record string of
Yeah.
ETF inflows, and
We
then
had
we
five
saw.
days in a row, was it?
Yeah, this most recent one. So after
Right.
a period of outflows, it seems like the
Right.
inflows are happening again. We've seen 5 in a row as of Friday, I believe, or
Okay.
as of Thursday. So I didn't see what the Friday numbers were, but
I didn't see Friday either.
we'll
Yeah.
get it on Monday or on
Sure.
Tuesday next
Sure.
week or this week. But
Tuesday next week. Exactly right.
it's it seems that investors are buying the dips, and if India is well and truly back in the market, I think that that's the harbinger of more positive price movement in gold. What do you think?
Well, that's why I flipped it over to you. I knew you had those numbers. I think it's important for us to give information to our viewers, to our scrappers, to our jewelers who are hedging with us. It's important for them to understand, is there support under the market? I think you did a great job with it. I think you're right. I think that if the slack is picked up, remember, this is important. Gold is an inelastic market. It only expands by 1.3% annually on a good year. And guess what? This isn't a good year. We're not seeing as much coming out of South Africa. We're not seeing as much coming out of Africa. So in effect, it's a flat market this year. So if we have large consumption, all of a sudden, it's just not there. So we're going to see these prices stay.
Yeah. Yeah, I like the price action, generally speaking, although it has been a little bit volatile lately. Speaking of volatile, let's move on to silver.
Sure,
So
sure.
silver
And
was,
you know what? The interesting thing, I think, and I'm going to read this stat to you guys. 991 million ounces was the posted final number for usage and consumption last year. And this year, photovoltaic cells, which, as you know, I watch.
yep.
China is talking about almost doubling their photovoltaic output. So it seems the smaller cells that are being used for homes versus, they wanted to build these giant farms and this and that. But Americans are saying, you know what? Put 6 units on my roof and take my electrical bill down to zero. They're getting huge demand right now, and hopefully the solution that is spread on the glass or the plastic, depending, will be in large consumption, and that is basically all silver. So we're looking for some very good days coming ahead now, once we come out of this COVID problem.
Right. Yeah. So, we made a run at 29 bucks last week. We got as high as
Right.
28.90 before the market stalled. Um, I think the chart pattern that has emerged is very similar to gold. It's kind of symmetrical triangle-ish, which is a continuation pattern. So I'm
Right.
encouraged. I like that the ratio remains under pressure, still trading around 71, 72-ish.
Okay.
And so I think that that's all very constructive to the underlying uptrends in both the gold and the silver market.
Yep.
And it strikes me that much like gold, that investors are inclined to buy the dips. When the market sells off, volume on our website and so forth picks up, people want to still
Yep.
buy silver.
Oh, our bullion and gold dealers have been hedging a great deal. We're seeing nice numbers coming across, so the public is definitely buying.
Yeah. The PGMs, a bit of a mixed bag last week.
Really was.
Platinum was down 2.6%, but palladium was up 4.4%. I'm inclined to attribute that to, well, a couple of things. Better than expected auto sales. So August auto sales.
Numbers and trucks as well. Light trucks look good too.
Yeah, it was about a 3.9% jump in auto sales in the U.S., about 15.2 million units in total. If you look back at the levels of auto sales kind of pre-COVID, kind of late last year, they were around 17.5 million. So we're not that far from those pre-COVID levels, which I think is really encouraging. In addition, the Chinese Auto Association,
yes,
CAM is their acronym. I don't know exactly what
CAM is the number, right?
Yeah, they're projecting an 11.3% gain in August to about 2.2 million units for China. So it seems like things are picking up again in the auto sales department. That's going to be good for palladium. And platinum as well, if trucks are in the mix
Not bad
as
for
well.
copper either.
Yeah,
right?
and copper.
Sure.
But there is a definite divergence last week between palladium and platinum.
Well,
What do you think
the
it
other
is?
thing that we need to let our viewers know is also that the palladium mined was in a complete blackout, and they were shut down. The rolling blackouts in South Africa have gotten so bad; they're worse than LA now, which I was surprised to see. And what happened is they ended up with no electricity at all, And what that means is that they have to go to their generators. The generators really don't create enough, but it's close. But now you're burning number two diesel, which means the cost of your net product goes up exponentially. And subsequently, you have to charge more for your product. And right away, you have an exhaustion gap because they're not producing as much, if any. And secondly, we have a slowdown right now of production coupled with good auto sales. And you put all of those together, you get a perfect storm and you get a giant jump into price.
Yeah, so Palladium set a 5-month high last week, traded as high as 23.85, and it was the third consecutive higher weekly close. So that market looks really strong. It's still well within the range that was kind of established, when COVID really did hit the U.S., kind of March, April. We
Right.
got that huge range, and we're still within it, but it's definitely looking a little healthier within that range. And with the fresh 5-month highs,
Right.
the path of least resistance seems to be to the upside. And as you suggested, better demand, tighter supply.
Right.
It's sort of a recipe, looking back to my Econ 101 class many years ago, a recipe for higher prices. So
And I think we should coin a new term here, which is going to be PC, but pre-COVID.
yeah,
What was that? Oh, that was PC.
BC.
And because I mean that's pretty much how every economist is looking at things now. They go, oh, you know what? Before the COVID, we had that. I think we just call it PC. It's sort of like AD and BC, and now it's PC. Because it really is an economic event.
Yeah. Let's move on to copper. Copper had a really
Please
good
do.
week last week, up
Monstrous.
2.3%. That too was the third higher weekly close in a row, and it set a 2.5-year high. We traded as high as 309.29 before we sold off kind of midweek, and so kind of volatile there, but rebounded nicely on
But we
Friday.
ended up, and remember, we've been saying now for the past 3 weeks that our real big resistance number was 0708. 303 it had to close above, which it did. And
Yep.
so very good technical call on your part, Pete. Really, really strong. And we went up to 0708 and we closed up there. So we're going to have a very interesting Tuesday, I think.
Yeah. So let's. I've been kind of impressed with the U.S. data. We've talked about this for a couple of weeks now, but just kind of run through what we saw last week. And this sort of plays into copper as well. But manufacturing PMI and ISM were better than expected.
Yeah.
So that's encouraging. We've already talked about auto sales, which beat expectations. Factory orders up 6.4% in July
Surprising.
on expectations of 5.8%.
Right.
So that's good. And construction spending was a little bit of an outlier. It was only up 0.1% when expectations were 1%. So that was a little bit of a disappointment. But overall, the data are coming in pretty decent. And then obviously we ended last week with non-farm payrolls, had a solid number, right around expectations, around 1.4 million. Previous to that, on Thursday last week, we got initial claims back below 1 million, and in fact, it came in at 881,000, where expectations were 980,000. So the employment picture is improving. Most notable, though, from the jobs report on Friday was the drop in unemployment.
That was
Down
a
to 8.
giant number. That really
Yeah,
caught people by surprise.
yeah. Expectations were 9.9%, but they fell all the way to 8.4%.
Right.
So that's great, and some of that is being attributed to more government hiring for the census. Also, some people are classified as out of the workforce and not seeking employment because of COVID. So that sort of impacted it as well. I think the number was like 5.5 million identified as being no longer in the workforce and not looking and waiting for COVID
No,
to subside.
absolutely. We've been seeing tremendous numbers all across the board, which to us reflects on consumption of durable goods, cars, things of that nature. Because remember, we're dealing in metals, so we give you these underlying numbers. Pete Grant writes a newsletter in the middle of the week, which will fill you in on a lot of this. Please take a look, find it. It's really, really good. Also, I look at a lot of the underlying things. Zinc is used for anti-corrosives, aluminum for auto bodies, things of that nature. We just sold the largest amount of rolled aluminum to China that we can recall, and it was just monstrous. And what that means is, in effect, if they're buying rolled aluminum, they're going to be hungry for copper because they're making bodies for dryers, for washers, for refrigerators, anything that's extruded off of rolled steel, which we're seeing the numbers continue to go up. All of these point to larger consumption of copper. And if you look at the copper price, it's reflecting the fact that China, all the copper out there right now, are coming to the table, and they're hungry. And it looks to me like our copper guys, our scrapper, at United Recycle. I mean, we love those guys. United Metals Recycling, probably one of the hardest working guys on the street. Guys, look out! We're going to see continued good demand. John Sacco over at Sierra, a guy, he makes some of the best shredding equipment in the world. I think people are going to be coming in, and the dogged market in aluminum is going to be turning around. Keep your eyes open. That could become very interesting as far as demand goes. So all of our scrappers, our end users and producers, we're seeing strong underlying demand coming out of Asia.
Yeah, we're encouraged by all those numbers.
We're very encouraged, absolutely.
Let's look ahead to this week. We obviously have the Labor Day holiday on Monday. We're going to see Bank of Canada and the ECB announce monetary policy on Wednesday. Anticipation is both are going to hold steady at this point. Keep the foot on the monetary gas pedal, but probably no movement on rates. Thursday, we see PPI. We'll see initial claims again. Looking for another number in the 800,000s. 828 is the expectation. Wholesale sales also out on Thursday. Market is expecting a 2.8% increase, which is a good number. And then Friday we have CPI, 0.3% increase is what the market is anticipating.
Great.
So inflation continues to creep up. Not that the Fed cares anymore.
Right, that's an important point. Yeah, remember that the Fed is going to allow inflation. It's very friendly to gold. Another cog in the wheel here to give us an underlying support.
I call it another tailwind. We like those tailwinds.
I like it, All right, buddy. Right. Listen, I think we covered everything. Hopefully they will give us a like. They will sign up, subscribe to us. If you want to find this in your mailbox, check out Zaner Precious Metals website. If you need to buy some metal, we have it. We're delivering live. Also, Peter Grant's newsletter is very good. Comes out midweek. It'll help get you caught up. And all of you hedgers and bullion gold, please give us a call. Platinum, Palladium. If you can't find somebody to hedge it off, give us a shout. We're also offering copper. We do copper. If you are a scrapper and you want to get rid of mitigate a lot of your risk, we're right here for you.
Copper down to the pound. Nobody else does that.
We're the only guys doing it. We can figure out what your load is right to the pound and lock it up.
Yeah. If you are interested in the Grant on Gold newsletter, we're working on a distribution process for that right now. But in the meantime, just leave me something in the comments down there, and I'll make sure you get on the email list. And with that, I'm Peter Grant in Denver. Have a great trading week.
Enjoy Labor Day, and I will see you guys next week.